happy Monday. I hope this finds you well. A jittery Wall Street liked the big picture it saw in the Labor Department's May employment report. The economy added 175,000 jobs last month. Decent hiring growth, not dismaying to investors, yet not impressive enough to signal the Federal Reserve to taper off QE3. Economists polled by Bloomberg forecast payrolls rising by 163,000. So the jobless rate ticked up to 7.6% in May as more people started looking for work. The private sector hired 178,000 new employees, and the number of discouraged job seekers hit a 52-month low. The Dow had its best day since January on Friday, rising over 207 points in response. Well, factory activity contracted in May, and that was a message sent by the Institute for Supply Management's latest manufacturing PMI. The May reading dropped 1.7 points to 49%. On the other hand, the ISM service sector PMI rose 0.6 points in May to 53.7. Well, the central bank's latest anecdotal survey of businesses, lenders, and other segments of the private sector noted modest to moderate economic expansion, as opposed to the moderate growth referenced in the previous edition. It did report a moderate to strong pace of expansion in the real estate sector. Well, volatility did not stop stocks from advancing last week. The Dow rose 0.88% to 15,248, the NASDAQ 0.38% to 3469, and the S&P 500 0.78% to 1643. NYMEX crude oil soared almost 4.5% for the week to settle at $96.03 a barrel on Friday. Another factoid of interest is that the real yield of the 10-year Treasury note went into positive territory this week for the first time since January 23rd, 2012. Well, the data stream looks to be fairly light this week, really getting going at the latter end of the week. On Thursday, the Census Bureau provides its May retail sales report, and the latest initial jobless claims figures arrive. Friday sees the release of the May Producer Price Index, the Federal Reserve's report on May industrial output, and the University of Michigan's preliminary June Consumer Sentiment Survey. That's what I'm looking at this week. My name is Eric Hagen. I'll keep my finger on the pulse of the economy and report back to you next Monday. So please click the button right below at the bottom of the screen, subscribe, and I'll chat with you then.